All right. I hope you all are having a good weekend. Doing my weekly market update. And so we're going to start here with a fun little exercise that takes a look at the S&P 500 on a yearly basis. These are yearly candles, okay? And I also have the 5-year simple moving average in red. All right. And what I'm illustrating here is the profound correlation in what we're looking at specifically when in a given year the S&P has this is going back to 1952 when the S&P is closed red and tests this 5-year simple moving average. What has happened on average, on aggregate, in terms of mean gain the following year? All right. And again, just as a reminder, I'm not a financial advisor. This isn't financial advice. Do your own research. This is just my view on the markets, how I see them. I could be wrong, but want to just get that out of the way. That being said, let's get back to this exercise. And so when you have a test of this 5-year simple moving average, the following year, what happens? Well, this is what happened in 1954. That's quite the rally. We had the same thing happen in 1957. That's quite the rally the following year. 1960, that's quite the rally. We see a little pattern here. 1962, that's quite the rally. In each of these instances, you broke previous all-time high so far. 1966, you get a test, and the key here is it closes above, right? It's either a test or a close above, and or a close above. And so in 1966, the following year, it closed above the prior year, making a new all-time high. So new all-time high so far in 1, 2, 3, 4 instances. 69, as you can see, you had a failure to reclaim that 5-year. And so we're going to go to the next instance in which that happens. And the next instance is 1977. And this is the first time that you did not, so far, that you did not make a new all-time high the next year after a red yearly candle. And so what happened here, it made a double top, okay? It made a double top and it closed towards the bottom of the range. And so that's strike one. So we've got a 1, 2, 3, 4, 5, 6, 5 out of 6 instances where the next year you eclipsed all-time high. Just for note, in 78, the following year it ended up closing at higher than that red candle, and then the following year it broke previous all-time high, which was back in 72. So that's important to note. So now we move along to 81. You get a nice test, close above. The next year it closed at new all-time high above the previous year. 84, clean test, beautiful candle. Following year, massive gain, new all-time high. 1990, same story. 1994, same story, powerful rally. And we go to our next instance, and that is 2011. And again, dragonfly type candle closes above, and the following year, we eclipse the previous year's high, not all-time high. It was the next year where the markets made all-time high. So the key here is that it's either made a new all-time high or eclipsed the prior year's high so far in all but one instance, okay? And then we go to 2018, where again, you get a test of that 5-year simple moving average. Following year, you get a massive gain to fresh all-time high. And last year, folks, we did it again. We tested that 5-year, closed above it, and where are we now? This is where we are, okay? So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 instances in the past. Past is no guarantee what's going to happen in the future, but that's a heck of an N. Okay. Going back to 1949. And the aggregate gain, I already did this work. The aggregate gain in all 12 instances has been 15% higher the next year. So that's the year we're in right now. Okay. So if we were to extrapolate the mean gain, that would indicate a yearly close. If we track with our average gain at over 5,500 S&P, at least or greater than 5,500 S&P in 2023. So that's in September, October, November, December. That's 4 months. Okay. And so that's what the datas are showing us. Again, no guarantee, but the probabilities here, when you have an N of 12 and 11 of these 12 instances have resulted in either fresh all-time highs or eclipsing the prior yearly highs by an average of 15%. So I figured I'd start off with that, and we'll take it from there. Next, we'll go into Bitcoin. Not a lot's changed here. I made a video on Twitter about my thoughts last night. I'll just kind of quickly recap those. You know, nothing has changed in terms of my macro. And folks, I realize I got a comment last week that, you know, I'm being irresponsible to my followers, and feel bad for those that are following me. At the end of the day, as I said, this isn't any type of financial advice. My time horizon on the Bitcoin that I own is 4 years, right? So the Bitcoin that I acquired in this range, in this range, in this range, in this range, I've got a 4-year minimum time horizon. I just happen to think, okay, and I could be wrong, that we are still in this bull market that began in December of 2018, consists of 5 wave moves: an impulse 1, ABC corrective 2, an impulse 3, consisting of 1, 2, 3, 4, 5 subwaves, a massive ABC flat correction, an expanded flat correction into 4, and 5 being in front of us, ending before the end of this year. Again, I realize that sounds very speculative, but that's my belief, and I wouldn't be, if I'm not honest, then I'm doing myself a disservice. But again, if we don't get an impulse here, it doesn't matter to me, right? My time horizon is 4 years. I just don't think that markets are predictable, in that half the folks that are thinking a new bull market just started and it's easy money, you know, easy gains into 2024, 2025. I just don't think that plays out like the masses believe, just like I did in October and November, when everyone was calling for, you know, 15, 20% downside, big recession, end of this bull market. I saw that as a massive correction. And that's in line with what I'm seeing with the Bitcoin high time frame chart, folks. This is just a massive correction to me, and massive corrections like this don't happen very often in markets. And when they do, they inflict a PTSD type of mentality to the participants, and it's very hard to conceptualize something like a cycle that I'm outlining here, especially when you're not exposed, right? When you're waiting for it to go lower, or just still have some scars from the previous year. So again, my base case remains that this 5th wave is in front of us, and you know, what we're experiencing in my mind is just a time-based capitulation, right? There's 2 forms of capitulation. There's price capitulation, where price can, you know, get cut in half in a matter of weeks, and then there's time-based capitulation, where it feels like that's what's happened, but in fact, it's the opposite. And just a lot of time has gone by, and market participants have just gotten themselves chopped up if they you know, weren't just sitting around doing nothing patiently, right? If you were trying to trade this range, Good luck to you. Congrats if you shorted up here and made some money. Congrats if you longed down here and made some money. But that's that's neither here nor there, right? If you look at Twitter, which isn't always the greatest thermometer for sentiment, because the algorithms in my mind just kind of exacerbate what you view the most, right? And so things tend to get projected that are a bit more dramatic than they are. But what do we have here, right? And you've heard me review this. We just had this massive accumulation range, and we're still above it. When I say time-based capitulation, go back to March 2023 when we had this massive weekly candle and we finally got over this $25,000 level, 25,400. And it was euphoric, right? It was euphoric. We'd won, finally broke this range, higher high, higher low, higher high, higher low. And where are we now? We're above it. Okay. We're above it. And we haven't closed. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 27 weeks. 27 weeks unable to close back in this accumulation range. And so when I look at this schematic, and as I've overlaid this before, I contend that we're very similar to what an accumulation breakout looks like, but make no mistake, right? These aren't obvious when you're in them, right? We're in my opinion, in this SOS range, but this time-based capitulation would have you think we're way lower. Right, we're struggling to get out of this, out from underneath this, $25,000 ceiling, but it's the opposite. Okay, and so that remains my viewpoint on this market. Support, I get more bullish the closer we get to support, unless, and the invalidation here is a weekly close under this 24/7 range. And even if we were to get back to this 22 and change level, and make a higher low here, that's still an uptrend. Okay, so even a worst case scenario, where the market, and everyone's kind of looking at this 24 level, I think if we could get a sweep down there for sure, but even in the case where the market makes a move for this trend line that has 1, 2, 3, 4, 5 points of confluence, it would still constitute an uptrend. Okay, so that's how I'm viewing it now. A close below, weekly close, below 21.8. That's a change in market structure, or a significant change in market structure. But again, right now we are above this entire accumulation range, and I'm going to act like it. All right, and this is where we are. This is where we are until that changes. Let's do a little low time frame exercise. I did this again on Twitter last night, but I'll do it again. When I look at these structures, as I did last week, for those of you that watched that video, I see accumulation type structure here, and I don't know, it's 60-40 for me, the path we could take, right? I could see this, getting on one of these moves, and then we get our capitulation down, sweep that 24,754, get a test, and then you come out of this with a powerful move that engulfs the entire range very, very quickly, right? That's option number one. Option number two in my mind is, we just get a move and we start moving next week. Okay. There is option 3 and 4. Option 3 would just be crab sideways. This is the range. This is the range we're in, right? The range we are in right now is pretty well defined. So it could keep crabbing. I don't see this as a higher probability move, given the impulse that we just had down. I expect an impulse out, could have a spring, maybe it doesn't. And then the fourth possibility would be, again, like I said, you start getting a weekly close under these ranges, and that, you know, could take us down to 22, 21. But again, that hasn't happened. I'm just kind of giving you how I see this from all viewpoints. What's another, you know, what else builds my thesis in terms of why I'm not seeing the highest probability or even a high probability of significant downside and market structure shift with Bitcoin? And you've seen me do this with MicroStrategy, and you've seen the reasons, and I've explained them before, right? MicroStrategy sniffed out during this impulse Bitcoin's all-time high 8 weeks prior. It sniffed out that Bitcoin was in a corrective move when it didn't make its all-time high in November 2021. And so kind of going back to the principles of Stan Weinstein and figuring out, you know, from a high time frame, zooming out, where are you within the confines of the market, right? Where are you? Are you in the stage one accumulation range, basing range, where it's under the 30-week moving average and consolidates, and finally you get a reclaim and a retest, and then you're in a stage two? Are you in a stage three, where after a massive price appreciation, the asset then starts interacting with a 30-week, you get a failure, and then it starts at stage four, clearly under that 30-week? And so let's again, I'll just remind you, that's the framework at which I'm looking at this from a probability standpoint. And so if we go back to MicroStrategy's previous major impulse, we can see, and let me zoom in on this for you a little bit. We can see this 30-week, right? And you're under it, you're under it, you're under it. You get a reclaim, you get a throwback, a couple throwbacks towards it, and then stage two uptrend. Very clear, right? Very clear there. And then what happens is you start getting closer to that 30-week, you breach it, you're interacting with it, failure, stage four downtrend. Back into a stage one basing, can't clear it. Well, you do here, right? You do here, and you do here. But remember what I said last week of what trumps on the high time frame? What trumps everything else for me is the direction that this moving average is pointed, right? And that's pointed downwards. And so this trajectory of that moving average has the most power in this trend. This trend is very, very powerful. It has not come to an end, okay? And so even these closes above fail to hold. Only when this moving average begins to start to smoothen out, right? Flatten out, do you see the asset, in this case, MicroStrategy base, you get a reclaim, you get a couple throwbacks, 2, 3 throwback, and now you're in a stage two uptrend until this is proven otherwise. You're at the beginning of a stage two uptrend. And you know, with Bitcoin right now is under its 30-week moving average, and I've explained why. With all the traders and leverage that go on with Bitcoin, it's a little bit tricky to in my mind, to use that information as a solid predictor of probability and trend. Whereas with MicroStrategy, there's less of that going on. And so this is more indicative of institutional long-term investors versus breakout traders and folks that can use a lot of leverage and margin their Bitcoin. And when you margin your Bitcoin and you get margin called, what happens? The Bitcoin gets sold, right? The Bitcoin gets sold. And so that can cause a reaction to the downside that's less indicative of the overall trend. Whereas with MicroStrategy, we haven't even gotten a test of this 30-week. And so, you know, we've got this cloud here. We've managed to stay above. We've got this nice throwback to this massive range. And so right now, this is where I need to get the most bullish, right? Not the most bearish, right? Is when you get a nice throwback and the trend is still intact. And so I continue to have that outlook on the high time frame until proven otherwise, right? And what's proven otherwise on MicroStrategy? Well, I've got 2 being in here. You get a weekly close below 323, and then I'll have to reevaluate this count. Okay. Let's go to the Nasdaq. And Nasdaq, last week we did the video illustrating, and this is a weekly chart. Couple things, right? We had a nice 2 weeks in price action. We closed above the 5 and the 9. And this week we had a rough week, but we still managed to close above at least the 9. And I think we're right at a little bit below the 5. So what do I expect moving forward? I still expect the trend, this direction to continue. Okay, this is the trend, this is the direction. I expect that to continue. The path, that's the only question. If you come back and look at a successful retest of this 20 EMA on the weekly, we saw that in the past, but you also can get another retest, right? We saw this in the past, but you most certainly can get another retest. So not ruling that out, right? Another kind of drop back before it goes, but again, I'm not trying to trade the day-to-day, week-to-weeks on these. I'm looking to stay in uptrends for as long as I can. So right now, still very bullish in my mind. Next chart, let's go to SPY. This is the daily chart on SPY, where I've kind of counted these wave moves out and the sub-wave moves out. And so in my mind, my primary count is that the two wave is in of this minor count, and 3 is next, right? So I'm expecting a real a monstrous rally. I really am. And I think this next rally takes us to all-time highs and above. That's the way that I'm looking at it. Now, there is a possibility here. There always is a possibility. I should say that we just did A, B, and then C. So I could be wrong in this analysis. And that this next impulse is delayed. But for right now, that's not my primary count. Let's just take a look at this on the weekly as well to see if that C leg correction, actually, let me redraw that, put that back in here, and just kind of see how that lines up with some of these longer term moving averages. Okay. Because if I were to see that C, come in at a level of significant support in terms of one of these long-term moving averages, that would potentially increase the probability for me. So let's just take a look. Okay, so we didn't even test this 20 EMA, right? So that would be fairly unprecedented, the C move breaching the 20. When we go back to strong uptrends, you just don't see it, right? You don't see this 20 get breached and meaningfully breached, right? Meaningfully breached, and that's the key here. Let's just keep going all the way back and just observe uptrends. You got a week there, you got a few weeks there, but those aren't meaningful breaches, right? Where you've got, and these are meaningful breaches where trend has changed. I'm talking about uptrends, right? And if we go all the way back, we can kind of see that area in uptrends, and that's if this then that probabilistic viewpoint. If we are in an uptrend, which I contend we are, that that this to me is the lowest probability move. Could it come back down and get a little bit of a breach? Sure. Sure, it could. I just don't see a big one because there isn't a lot of historical precedence for that in uptrends. Okay. Let's take a look at, I also want to take a look at the simple moving averages. And if we look at the simple moving averages, again, these are just starting to coil up, right? We've got direction clearly starting to point up. Again, there's such a long basing accumulation phase. It takes a lot to unwind the direction of these long-term moving averages. And so, which one do we have here? Let me just double check. Yeah, that's a 30-week. So the red is the 30-week. So could we get, sure. You could get, this could be an ABC to the 30-week. That would be reasonable. And that would still be bullish market structure with a bounce off that 30-week. And the 30-week would probably catch itself up around here. So, all right. I'm glad I did that exercise. Next, let's go to the dollar. This one has been really just stubborn, huh? My video last week, I got this one wrong for sure, right? So I had a lot of topping signals last week. I had this trend line drawn like that. Okay. I had something like that. And we busted through it. We busted through it. That's a powerful move through it. And now we're left with, in my mind, kind of the last stand is this 105 level of resistance. And so let me draw that out a little bit here. What I also showed you guys last week is going back, 20 years, 30 years. There are 3 other instances where the dollar has risen and stocks go up and risk assets go up. So am I making any investment decisions based on this? No. I'm just noting that in these powerful downtrends, in the last 2 powerful downtrends in the dollar, is when Bitcoin and the Nasdaq have had their biggest runs, and you can see them listed here. If we take a look at on the weekly time frame, again, so the dollar is also doing 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 straight green weeks in a row. That hasn't happened. That hasn't happened in 20 years. Okay, so the law of probabilities here tell us another 8 straight weeks is the probability of that is low. Okay, so could we get another week up here? Absolutely, but the power of this move is measured by the RSI. The power of the move where the price was higher in March, in November, we could keep drawing this thing all the way down, right? Was a lot less, but price is lower. So that's telling you something. So we're going to keep an eye on this. I'm going to bounce to my Twitter feed for a second because I posted a chart yesterday that I think is relevant to look at today. Okay. So I put up Bitcoin, Nasdaq, and the dollar. And something I did note, which may kind of give some confluence as to what's going on here, is if you look at looking at the dollar's downtrend, and 1, 2, 3, 4, the last 4 major downtrends. When that uptrend first broke is when you saw a low in at least Bitcoin. Okay, when this uptrend here broke, okay, when this broke structure, that's where we saw the low in Bitcoin. When the uptrend again broke, that's where we saw the low in Bitcoin. When this massive parabola broke, that's where we saw the low in Bitcoin, and that's where we saw the low in the Nasdaq. The last one is the same we saw the low in the Nasdaq, didn't correlate. 2015 didn't correlate 2011. But let's just notice some structural differences in what the dollar did then versus now. So it broke its uptrend and then it went sideways for a period. Okay. And in that sideways period, you saw the Nasdaq consolidate, and then that was right before it made its next move up. We saw Bitcoin really make some gains during that consolidation, some massive gains during this consolidation phase right before its parabolic run. In 2015, same thing. The dollar then consolidated sideways for an extended period of time, and the Nasdaq did the same thing. Bitcoin did the same thing, and finally, right here, right, you can see this little deviation. Right at this deviation point is when, what did the Nasdaq do? See this deviation? The Nasdaq didn't care. Right, it made its low here and it starts moving up. Bitcoin, 3-4 months before that deviation, made the move to the top of this range, a little bit of a stutter step, and then parabolic. This is a deviation range. This is a deviation range, which all essentially were the starts of these parabolic runs. And so let's look at 2020 deviation range. Well, the Nasdaq had took a massive hit during that deviation range. Bitcoin took a massive hit during that deviation range. But the key was fell back to support, right? Fell back to support, and then began its parabolic run. And so could there be room for a massive deviation of the upside on the dollar? Sure. But right now, the Nasdaq is at support. Bitcoin is at support. And so, you add all these things up together, there's certainly room for a little bit more upside. But in the long term, this is telling me again, we are pre-downtrend. And what's pre-downtrend in each of the last 3 instances has been pre-parabola. Pre-parabola. And so, I'm not getting, right, I'm not what's the word? I'm not macro just bullish for no reason, right? There's levels of evidence that get me to these conclusions, and they're all around me. And so from a risk reward perspective, this is the best entry I've seen all year. This is the best entry I've seen all year. It's akin to this entry here, it's akin to this entry here, it's akin to this entry here. And the Nasdaq is the same. And so that's, this is one of the things that's shaping my bias. All right, let's go to the miners. Let's go to Mara, kind of my bellwether for what the miners are doing, because I think it's the healthiest looking miner at the moment. Why do I think it's the healthiest looking miner at the moment? Well, not because of anything fundamentally, simply because of what the technicals are showing me, and I could most certainly be wrong. What are the technicals showing me? Well, it's above its 30-week. Much like MicroStrategy is, this is a 30-week moving average. We've got a nice throwback to the 30-week. We close our weekly above that 30-week. Okay, and so again, this to me structurally is in an uptrend, and I most certainly could be wrong, but until proven otherwise, the miners here are looking really good. Now, if we get a weekly close below 10, this 1016, that would kind of invalidate my thesis that the 2-wave corrective wave is in, and I'd have to reevaluate that. So until we get to that point, this is still my primary count in the way that I'm looking at the miners at the moment. Let's look at yields, the 10-year, and what we have here. This is a weekly chart going all the way back to our previous top in October 2022. And again, I continue to just read this as a double top, okay, until proven otherwise. We've got lower strength, equal highs, lower strength than the previous equal high. And so, nothing is certain, but my primary consideration here is that yields, the macro direction for yields is down until proven otherwise. Let's look at gold. Got the monthly chart up on gold. And let me throw up the Bollinger Bands here on gold. And again, this is just continues to look like a bullish structure to me, right? We're over the Bollinger Band midline. We're still in this rectangle. Rectangles are beautiful continuation pattern, consolidation, continuation patterns. And my expectation here remains for gold to, after this consolidation ends, whenever that is, however long it takes, for a breakout to the upside. So structurally, nothing has changed with my view on gold. Last but not least, ETH BTC. Okay, nothing has changed with the ETH chart from last week. ETH BTC, this is a weekly chart in line format, and I just kind of look at this as just a massive pennant. Okay, and the inability to really just flush down from the top of this trend line is kind of telling to me. Most certainly could see it get down to 0.055 area range before a potential breakout, but to me this is a bullish structure. I could be reading this wrong, and if and when this breaks out to the upside materially, I expect the altcoins to perform. I'd expect the good altcoins to perform really well. I don't know what the good altcoins are. I don't own many altcoins, and so I'm the wrong person to ask about that, but that's the way I'm viewing this chart. And that's the update for the weekend. Hope you guys are doing great, and I look forward to doing more of these. Take care. Have a great rest of your weekend.